Yeah, that's the FDB president there, and definitely we know that this headline inflation we see in Nigeria is mostly driven by food inflation at this time at over 33%. So definitely we need to get the farmers back to the farm. But let's head back to the market now, talking about the FX market. We'll have Chuka Nwachukwu join us via Zoom. There's Head Asset and Balance Sheet Management at the UBA. Great to have you on the show.
Thank you very much, Larry.
Yeah, so definitely we're expecting this sustained winning streak for the Naira, but we're seeing it that snapped yesterday. Talk to me about what drove sentiment in the FX market.
Okay, thank you very much. The sentiment has likely been driven by CBN activity. Recall that during the last MPC meeting, the CBN governor spoke how CBN will intervene, and they've greatly intervened in the market. We've seen the rate drop from 1,800 levels to 1,600, and so that tells the volume of intervention in the market. And so we've seen the sentiment also. Some of the policies have been put in place, especially as regards the NOP for banks. Also, the BDC policies are greatly working. The essence of this policy is to ensure that the system continues to be liquid, which obviously is what is happening now. And so as long as this policy continues, and then, of course, implementation in full compliance, the bank obviously are complying. I do also hope that the BDC people will comply as well, which I think they are. We will continue to see appreciation in the Naira.
Yeah, but from where you're sitting, do you see some kind of appreciation for the Naira this week?
Yeah, absolutely. Like I said, as long as CBN maintain this momentum, and then of course banks are complying and all stakeholders are complying, we continue to see appreciation. So within the shortest period, I believe that we see around 1,400, 1,300 levels as it were.
Yes, and all of us are also hoping for that 700 Naira level at some point, hopefully. So let's talk about the FJ Savings bond auction for this month. That's the third one for this year. How did it go?
So that was last week. We had two maturities on offer, 2031 and then 2034. We saw the 2031 close at 18.5, and then 2034 close at 19% levels. This obviously has to do with let me put it this way, this is the high yield levels, right? Due to the MPC activity, especially the monetary policy rate increased from 18.5 to 22.5, and that's obviously means that most of the instruments in the fixed income market will continue to go up. For example, we've seen NTB came out last week auction at 19% for 1 year, and then also the Omo auction, which also came out on Friday, was printed around 21.5, and so this is the level. This is the season where we get to see high yield, and of course, investors will always demand for higher yield in order to make it attractive to invest.
Talking about moves by the MPC and the central bank governor, yeah, we've seen rates now over 20%. That's the MPR rate, and we're seeing CRR at about 45%. When do you think we'll start to feel the impact of the last meeting on the markets?
I think the market has reacted. If you see what is happening on the fixed income side, for example, I just mentioned that we've seen that the yield rate has greatly elevated, and so this will continue. The only downside, is the fact that the system is in repo. The system liquidity is pretty tight. As at last night, it was around 612 billion negative, and so that obviously we are impacting the market negatively, especially with the auction coming in today. But again, it's also still in line with CBN objective. The essence of increasing the MPR is also to mop up excess liquidity because of the worry on the high, skyrocketing inflation figures. And so this the policies is beginning to yield results on the fixed income market, and then as well as the liquidity impact in the system.
And talking about liquidity, excess liquidity at this point, would you say we're starting to see all of that being mopped up, at this time? And looking at that CRR ratio there, talking about 45% hike. Now, what do you think, or how do you think the banks are looking at this, in 2024, so that they're still able to give out credit, going forward? Because at the end of the day, we know businesses are going through a lot, right now, and they're definitely going to need credit. So how are the banks, looking at this?
So the essence of the 45% increment in MPR, CRR, is also to fight excess liquidity, and then, but on one hand, also to assist the bank in terms of managing better management of liquidity. So in a short term, the policy will hurt banks because bank will need to adjust, especially regarding liquidity. System has also been tight due to before the MPC, there's always been CRR debit, and then so that also have helped to mop up the liquidity in the system, as well as the traditional OMO auction. The essence of the OMO also is to mop out liquidity in the system. So for me, I think in the short while, the policy will affect banks, and then of course high interest rate will also affect some businesses. But in the long run, it's going to be a win-win situation for everybody, especially as regards the economy, because I think the part of what government is trying to do is to kickstart the economy through the through the medium scale businesses, to encourage them to be able to invest in some of the activities that will affect the common man directly. And so by and large, I believe that going into second quarter or third quarter, we begin to see the result of this government policy.
And going forward, what are you seeing, for that, for the rate, environment? I was talking about lending rates. Do you see this elevated, for longer, going forward in Nigeria?
I think what the CBN is trying to do is to most of the policy now is to gain confidence in the system, and that's what the governor said. And then secondly, to ensure that the inflation figures, and thirdly, also to ensure that the economy is kickstarted. Now, on the issue of lending rate, yes, we will definitely see adjustment in the lending rate, which to some extent will affect some businesses, but on the long run is a win-win situation for everyone. But again, the issue as regard the FX is not only monetary side of it. CBN is obviously doing its own part, which is monetary, but of course the fiscal angle will also have to be sorted out. For example, if you drill down the inflation figure that came out, you see that the food inflation is still going up, and so that obviously has to do with insecurity. And then that obviously falls to the fiscal side of policy. So if that is addressed, then we begin to see more farmers go to the farm. We begin to see farm produce, come into the end users, and then prices will start dropping. But for CBN, I think they've done extremely well, and they continue to do what is expected of them in terms of monetary. They can't really have much to do as regard the fiscal aspect of things.
Right, and we're definitely hoping that we win this battle when it comes to inflation and currency devaluation at this time. I want to thank you so much for joining me, Mr. Chuka Nwachukwu, Head Asset and Balance Sheet Management at UBA. Thank you so much.
Thank you, Ladi. Thank you so much.